Hello everyone, welcome once again to another episode of Sharing Session. So today again we have Nicholas here with me, and if you guys actually remember the last time round, we actually did a video on inflation. So today we are actually talking a subtopic on that. We know that inflation is kind of like rising of late, and a lot of commodity prices are also soaring. One of the key commodities that have been hitting the news headline pretty frequently of late is lumber. So today we will actually be talking about lumber prices, why lumber prices are soaring, are we actually too late into the lumber game, and at the end of the day, how to partake in the rise of housing demand. So these are the three key points that we will be looking to address in today's sharing session. So without further ado, we have Nicholas here again with us. Let's see what Nicholas have for us in today's session. Nicholas, please.
Preston, thank you so much. And again, thank you for having me back here. I enjoyed our talk last week, actually. And inflation, as we know, is a hot topic for everybody, not just us, but officials, but, people, ordinary folks in the economy. But like Royston said, we're zooming into one area because we highlighted that lumber prices were actually skyrocketing. And we wanted to actually learn a little bit more and share with viewers down here what are some of the forces that's driving this? And I think, I'll take the first part of the meeting. Royston will come in to close it. And that's, I think, where folks is going to be interesting, because we want to show you that there are many, many ways to play this game. Should you believe that lumber price is going to continue to go, or, it's going to probably fall in flat. Anyway, let me just again, just to remind you, at the bottom here, you can see, some questions have come in already. Thank you so much. You got any questions about today or with regards to NAOF or Royston, what he's been doing, please write them in, or please write in to him or to us for that matter. Okay. When preparing this, I was just trying to, look around and see, and clearly, these two things have been dominating capital markets in 2020, 2021, the last 12 to 18 months or so. Okay, folks, I'm sure you recognize on the left-hand side of the screen, it is basically Bitcoin. Bitcoin flew, I think, from about 10,000 or so US dollars per coin to, I believe, a high of about 60,000. Yep. On the right-hand side, you see Tesla. These two have been synonymous with how well the market has done and how much so-called money people have made. I know that both have actually suffered a bit of a pullback, a bit of a retracement, but there are obviously a lot of believers along there still that continues this, and who knows, this could be a buying opportunity. We'll cover that another day. What I want to talk about is, no surprise for guessing, a bit drama down here, but lumber, okay? And what you're seeing is a picture of a dead wood, and you think, how could that excite capital markets, or how can anybody make money from, just lumber itself? But before we go into that, just take 2 seconds. I know Royston don't like this, because this is something I just want to define the difference between lumber and wood. Okay, lumber, as you know, comes from wood. Wood basically is what's inside the tree behind the bark. But lumber is basically processed wood, and processed wood is being actually traded in commodity markets actually fervently. Why? Because they represent a raw material that the economy depends upon, a raw material that consumers depend upon for, mainly constructions, but other things including renovations, etc., or furniture, etc. So when lumber becomes a commodity-based item, it trades at different prices. And folks, this is what happened to lumber. Okay, from 2019, I've only got the last 1.5 year or 2.5 years sort of chart. You can see it's very obviously a huge number. Okay, a huge climb from the lows, and prior to 2019, okay, lumber was generally flat at the $300 to $400 range. Okay, but it really took off. This is a May the 4th. Again, I'm sorry that we don't have an updated figure. Today, lumber, okay, just like Bitcoin, just like Tesla, has pulled back and is hovering around the 1,400 level. Okay, now the point that I'm trying to make is this: from the lows of the COVID last year, when lumber hit around 250 or so, let's call it there, to the high peak of 1,600, that's 8 times, So we're looking at an 8-bagger. When people talk about bagger out there in terms of performances, Bitcoin, Tesla always dominate in every conversation that I've been in any copy conversation that I've had with my friends. But people don't think a innocent sounding commodity, boring commodity like lumber can actually cause that kind of stir. Okay, so the first part I'm going to cover, what has caused this. Okay, more importantly, it is more this climb that I will focus on. Okay, because ordinary folks, I mean, you would have thought that COVID would have devastated an industry, but instead it just continued to soar. Okay, so bear with me. This is just another chart I threw in perspective. I told you in the longer term, it was always hovering around this, and then things got really snazzy after the COVID sell down, and then it just took off. Okay, 3 reasons why lumber is soaring. One, you got a damn hot, sorry, I'm not sure if I can say damn, you got a very hot US housing market at play down here. Okay, now why is this? When the economy is actually not really bulging or budging in any big way for the Fed to increase interest rates for that matter. Okay, one of the reasons is this goes back all the way to the Great Financial Crisis. Okay, that period of time devastated the demand for homes or housing. Okay, from then to now, things are just starting to recover in a very strong catch-up fashion. 2, the second reason is mortgage rates all across have been very steady, which allows people to actually rethink and really come in and say, hey, look, maybe buy a bigger property or maybe upgrade or move to a different district. And the third reason down here is also just as important, the pandemic. Folks, when the pandemic happened, okay, everybody stayed at home. Everybody became a little bit more insular rather than going out. And when that happens, it just caused people to rethink about what the home is to a person. Okay. Now, the second reason, well, home sweet home. Okay. DIY renovation went crazy. How many of you out down there modified your home in some way? I mean, I know I did. I mean, I added an air conditioner, for example, to my living room, which was so happy. I'm so happy because I mean this weather is extremely unbearable sometimes. But no, we also bought some new cabinets and we also upgraded like a TV console and all that. The raw materials come from lumber. Okay, and more important than that also, I mean me together with I'm sure a lot of people who are still working out down there are all not working for that matter, finding that they have a bit more discretionary income. Why? Because you're not traveling, you're not spending $2,000 taking the family to Malaysia or to Hong Kong or to Japan, because you can't. And because of that, you tend to commit that money into your home. Finally, the last reason is supply chain. Okay, the supply chain has been quite screwed up, mainly on the demand side. Remember, folks, I showed you when the pandemic happened in April or May last year, we saw a big dive. All the producers, or rather all the producers of lumber, they clamped back, okay? They curtailed their supply. In fact, last year, supply grew by about 1%, but demand continued to grow at 5%. So that caused things like inventory, okay? I mean, the most recent report showed that inventory for lumber by the lumber producers was between 25 to 30 days. Normally, in normal times, it stretched up to between 45 to 60 days. Okay, I mean, 45 to 60 days is a norm. I mean, I know a lot of people have been looking at the technology industry and all, and they're tuned to just in time, but 45 to 60 days is the norm, but now they're down to 25 to 30 days. What this means is that it gives them, okay, or it doesn't give the buyer any bargaining power. You take it or you leave it, and when you're trying to build a home, you need to plan with some lead time. Okay, on the other hand, so this is basically the supply chain in this array. The other reason why is also logistics. As you know, the disruption in terms of getting the lumberjacks to go out there, the truckers to deliver, the sawmills to run and operate as everybody, have been enforced work from home. So all this basically caused, this sort of mismatch. Now, let me also talk about, and let me just highlight how big that mismatch is. This one is a chart for the last 5 years showing the existing single home family average sales price. Okay, you can see that just like lumber prices, home sales price or the price of an average home sales, this is North America or US for that matter, has actually skyrocketed also. Okay, I think, I'm not sure if Royston will share that number, but I read that the increased price of lumber has added as much as $36,000 to each average home price. If it's 36,000, then it's close to 10% just from that move up from lumber. Okay, but I wanted to just share this important point down here. You can see that the chart's very nice wavy, up and then down, up. This waviness is the seasonality effect. Why? In early spring, okay, the demand for lumber is at the peak. Sorry, not at the peak, starting to hit. And then it rises all the way till somewhere midsummer, late summer. Every year, without fail, it happens. Simply because the weather is more conducive for home building. Okay, people go out down there and they actually can build homes, and they usually build homes during summer. I mean, I'm talking about people in North America or the temperate countries, places like Singapore and Asia, they build 24 hours a day. Okay, but last year, what happened last year? That despite the COVID meltdown, lumber continued to home prices continued to go up because of lumber, and it just continued to climb even more this year. Okay, so we are seeing things that are totally out of their norm. Okay, and later, we have a point to address. Are we too late to partake? I mean, it's something which I think bears consideration. Finally, this is just a chart just to prove to you what I mentioned about. Remember, this is a very long chart that stretches all the way to the 1960s, 70s in terms of housing starts. Okay, and housing starts is a number that shows the number of housing starts. People apply for permits to build a new home there, or a single family dwelling in the US. Okay, and this chart has always hovered around this so-called 1,500, actually 1.5 million flat lines. Okay, however, due to the GFC, okay, everything collapsed so much so that we are racing to fill this gap for a normalized, sort of moving average. The point that I'm trying to make focused on here is this: when you try to decide whether we are too late or not too late. Okay, on the one hand, from this chart, it shows you that we may not be too late to participate in this run because there is a lot of catch-up left to do, But on the other hand, we may be too late, looking at the way the steep gradient of, prices have really shot up. Okay. So, okay, I mean, that concludes my part, but I just want to end my part with just one question for you guys. I mean, and this has actually been a very good study session for me also, because I mean, lumber is not something that we in this part of the world talk too much about. But folks, we just want to show you that you don't have to be in that part of the world, but you can play 8-bagger stories besides Tesla or besides, Bitcoin. The question I have for today, I mean, for you, Royston, why do you think developed countries use more lumber for home construction versus developing countries? It's something we always... Huh?
Seriously, I've got absolutely no clue why developed countries use more lumber for
really,
home construction. Do you? Yeah. Seriously, I don't have an answer for that.
Of course, I have many clues. No, okay. I mean, I've lived in Canada for many years and the UK for many years, and it is true. Lumber. I mean, most homes down there are wooden. Okay, and you would think, why wood? And wood is a bit more behind, whereas concrete is like, they're the more modern and all. Okay, there are several reasons, and I'll keep this very, very short. Okay, one, economic reasons. Lumber is a lot cheaper than concrete in the past. Okay, I mean, not at these kind of prices. Okay, but the per capita number of trees or wood available to a normal citizen in Canada or to the US is a lot higher there than it is to Asia. I mean, there are no trees around now. I mean, shrubs. Basically, no good quality trees that can build structures. Maybe cabinets, fine. Softwood. Two, okay, a bit of history. History is, when the early settlers from the Europe went over to the US. I mean, they had lumber in abundance of natural resource, and they use that to build homes, and they were good enough. Whereas in Asia, or rather not Asia, but the developing countries, especially parts of Asia, parts of Africa, for example, people build mud houses down there. And when the mud houses down there, it's basically coming from, taking things from the earth, solidifying them, and then basically constructing a house or a structure on that. And that's how cement came about. That's how concrete came about. And that's why traditionally we're using that. So actually in various parts of Africa, from what I've read and understand, Kenya, for example, they're using concrete all the time because cement is produced locally and it's actually quite cheap. The third reason, final reason, I won't take too much of that, is insulation. Okay, I have lived in Canada homes, and in Canada, the temperature on there drops to like minus where I was, minus 25 degrees, plus wind chill, minus 45 degrees. And wood insulates the home a lot better than concrete does. Because I lived in the UK, I've lived also in Hong Kong, and when the winter sets in down there, you get a cold concrete wall, you get a cold concrete house. It gets to your bones a lot more, But it's something that I thought, be happy to share with the viewers, and a bit of trivia there for you guys. So I'll leave it with Royston now. I'll toss it back to him, and to hear from him the ideas that he may bring to me and everybody else.
Yeah, thank you, Nick, on that very educational stuff with regards to why lumber is so much more prevalent in developed countries like the US and Canada as compared to this part of the world. So thank you once again for that. Now let's go on to my part, which is basically to share with you guys a little bit on whether or not we are too late in the game. This I will also like Nick to actually voice his view. I personally think that at this current juncture, so let me just pull out a chart and share with you a website which actually shows the current prices. So this is basically a website from Digital Capitalist. So it's a very nice website that actually shows you diagrams, and it essentially illustrates to you that today $50,000 worth of lumber can potentially only construct 2 and 1/10. 2 and 1/10, is it? 2 and 1/10 of a single family units. Whereas back in just 1 year ago, when lumber prices were roughly about 343 per unit, you can actually construct pretty much roughly about 10 units thereabout. So you can actually see the prices actually rising pretty substantially. So at this current juncture, we are in this particular area as compared to just roughly about 1 year back, when it wasn't really that expensive. So the key question is, are we comfortable in terms of buying at this current point whereby lumber prices are potentially at the highest price it has been over the past 25 years? So it's a pretty elevated level, and we have seen in recent weeks that there has been a pullback to the roughly $1,400 level. So whether or not it will then rebound substantially, or actually the correction will actually heighten, really it's anybody's game. And I think that just now Nicholas actually put up a pretty interesting chart in terms of seasonality. So the seasonality, we can see the chart going up and down, and potentially sometime in April, May, there's usually tend to be a drop in terms of lumber prices. Am I right, Nick? Around that period.
Yeah, for sure. Because
So
but it didn't happen last year.
It didn't happen last year because of COVID issues. So that might be an anomaly. But if let's say we are seeing that kind of situation as well normalizes, potentially we might see a pullback again during this period of time because of purely on a seasonality effect. But at the same point of time, I also believe you also just now have shared the fact that house prices are currently at an extremely elevated level. It actually increases pretty substantially, and that's really going to price out a lot of people who, just the middle class folks who are potentially going to feel the pinch in terms of the kind of rise in prices that they are seeing in terms of housing. So a lot of them in the past couldn't really afford to own a house. with
Yep.
prices actually increasing that substantially, that's probably going to be even out of the equation. So at some point of time, that is going to hurt demand, I believe. And at this current juncture, with some of the tapering being done and some of this handout being put back, potentially we could see demand for houses actually coming back, and that could actually have an effect on lumber prices as well. So that's my own personal view, that on a short-term basis, potentially we could see some short-term pullback even beyond the $1,400 level, purely because it has risen so much and so fast over such a short period of time. So I wouldn't be too surprised if it actually retraces back to the, say, $1,000 level, which might be the next support level. And if demand and fundamentals are really that robust, potentially we can then see a further rebound thereafter. That's my personal view. I'm not sure what you have in your mind, Nick. Anything to share with us?
No. I mean, all very good points, Royston, and clearly, I mean, showing me a chart like this or seeing the chart of lumber, I mean, I'll be too afraid to chase it now, but you're right. I mean, I think the levels that you picked up around the 1,000 level. The question is, could that be a good entry level? And I'm hoping to see if that's the view that I participate in or that I partake in. Maybe those are things that I should watch out for,
Yeah, I guess personally, 1,000 seems to be a level which might be a number that most people will start thinking, hey, it could be cheap enough. It's still pretty elevated according to past 25 years, but based on the current fundamentals and the housing demand, it does seem like it could be a potential entry point to enter if, let's say, it does actually retrace back to that level.
No, definitely. I mean, just to let everybody know, during this recording time, lumber is currently trading about $1,398, so 1,004, I'll call it. Yeah. So you're right. I mean, it's pulled back and it's actually held there. So let's see, what the data point brings out, in terms of driving this.
Cool. Okay, so a lot of people are wondering how to actually partake in terms of lumber, and I think the easiest way to actually do that is basically through some of these players. So to me, the easiest way, if you want to partake in some of the upstream lumber players, is actually just to buy a basket of these stocks. It might be a bit risky if you want to go into individual players, and I think that partaking in a basket is probably a safer way for most people. And once again, us highlighting all the stocks to you guys, as well as all this ETF, is basically a sharing session and
Royston,
not.
Yes. Sorry, may I just ask you to open the screen? I mean, to just maximize the screen at the bottom.
Okay, you can't see, is it?
No. I mean, I think if you can, yeah.
Okay. Just go into the slideshow, huh?
Yeah.
Okay. All right.
Yeah, I think it's clear. Thank you so much.
No problem. So, like what I've mentioned, this is a sharing session. So it's not an inducement to buy or sell any stocks. Just basically highlighting some particular interesting counters that you might want to take a closer look if, let's say, you are interested in terms of partaking in the rise of lumber prices. So for me personally, this is my own personal view. I think it'll be easier to actually buy it through a basket of stocks, and basically the two ETFs that I have actually, which is on my radar, is actually this ETF with the ticker WOD, Wood, and the other one with the ticker CUT. So basically, you can see the kind of stocks over here. A lot of them are stocks that most of us will probably not be extremely familiar with. Small, mid-cap, upstream lumber players who might not be on everybody's radar. But the truth is that their share prices have actually appreciated quite a bit alongside lumber prices. So today, if you are positive on lumber prices, if lumber prices have actually put back to the $1,000 level and you think that, hey, it's actually low enough and potentially you could see a rebound, that's where I would be potentially taking a closer look at these two ETFs. So this is something to potentially consider if you wish to partake in lumber prices, besides buying or having direct exposure to this particular commodity through the futures market. All right, so the ETF is also one particular way that you can do it. And you can see the price performance over the past, I think this is a 1 year horizon, it has actually appreciated. Both of them have actually performed pretty well, roughly about the same level of performance or appreciation, 78% versus 70.4%. So yeah, they have done pretty well over the last 1 year, which has kind of like significantly outperformed the market. But that's purely because lumber prices have actually appreciated that significantly. And because of its diversified nature, just now Nicholas have actually shown that lumber prices have actually increased by how many times? Seven, eight times. Over a short period of time. Yeah, but you cannot probably expect the same kind of doubling or quadrupling effect for these ETFs lah. So, but having said that, overall, these players have actually, these two ETF have actually done pretty well over the last 1 year. So this could be one way to have a diversified exposure of upstream lumber players. So that is only if you are positive generally on, I would say, lumber prices going higher. But at this current juncture, like I mentioned, there's potentially quite a bit of headwinds moving forward. Prices are at an all-time high. Housing prices are also at an all-time high, and that could potentially trim potential forward demand. So if your view is that demand might be actually coming down in terms of people might not be actually able to afford houses because of how pricey they are, then potentially you want to be looking at some of the other home improvement players. So this is also one way to kind of like partake in the general rise of home ownership, so to speak. So today, if you cannot afford to buy a new home, you probably will want to stay in your existing home and kind of like refurbish them. And basically, the two market leaders in terms of home improvements are Home Depot as well as Lewis. So these two are the ones that potentially you could be looking to enter. And I just wanted to share with you guys in terms of how expensive or inexpensive they are over the past 10 years in terms of their price earnings. So these two counters are trading at a price earnings of roughly about 23 times for Home Depot as well as 21 times for LOW. And so this is slightly cheaper in that sense. And over on a 10 years horizon, you can see that at the current juncture, it is probably slightly on the higher band as compared to its past 10 years trading range, which is, I would say, below 20 times, maybe 18 to 20 times. That's where potentially it is of certain value. Whereas for Lewis, at this current juncture, it does seems to be coming down in terms of its price earning and could be hitting its lower band pretty soon at this current juncture. So in my own personal view, I think this is a counter which potentially is cheaper and potentially you might want to take a closer look, so to speak, if compared against these two players side by side. So that's my own personal view. I'm not sure what Nicholas thinks with regards to these two stocks. Any views on your part?
I don't no, it's great that you're highlighting both Home Depot and Lowe's, and I'm just trying to Google down here because what I mean the best significant thing I can get down here is that Home Depot, you can see it's a flat line all across the last 10 years or so, or 8-9 years or so. And to me, folks, Home Depot is a blue chip. It's a big name in the US, and it's a key player in the sector that it does. Basically, they sell home improvement equipment, so on and so forth in the US, and they are just ubiquitous everywhere in the market down there. But the stability of the stock price is wonderful. So the first thing I did was try to Google to see what kind of yield Home Depot offers. Sadly, I'm only getting a read of about 2.3%. Okay, where Lowe's is concerned, I'm not sure if it's a similar, but just bear with me here. But yeah, I think it's around there also, the same sort of dividend yield, but it can be used for consideration, and certainly, I mean, these guys are what we call maybe more downstream players with regards to the price of lumber, for example. Earlier, Royston showed a chart, upstream boys, meaning they are right in the thick of things. They are there producing wood, if you may. Okay, these people sell wood. but selling wood means on the buying price that they have to buy on wood. So they may be squeezed in the middle, or they could actually see margin expansion if the price of wood comes down. So it's, again, thank you so much for bringing those two stocks, new names, because I'm quite tired of listening to tag your Amazon, your Fangs and all that. So these are all very good names. I think that that you can introduce people to look at for various reasons.
Yeah, I think precisely just wanted to highlight some of these blue chip tech names, not tech names, blue chip names as well, which are non-tech in nature, and potentially this could be a little bit of a diversification from your portfolio. If let's say you have always been investing in a lot of tech stocks of late, which have been basically the hype for since 2020, a lot of growth stocks, tech stocks have actually appreciated, and that's basically have hogged the headlines pretty frequently. Whereas stocks like Home Depot, Lowe's, these are kind of like stocks which have been slowly and steadily appreciating in the background, and something that you should be kind of like aware that they might be potential winners in a market whereby generally whether or not housing demand is going to be strong or housing demand is kind of like weakening, potentially they could still be long-term winners, so to speak.
Okay, man. Thanks. I mean, definitely we'll try to put them. Okay.
All right. And last but not least, just another more niche idea. So this is potentially more on the tech side, I would say. It's basically going into potentially investing in digital real estate players. All right. So we have our traditional real estate players here in Singapore as well, like stocks like Propnex and whatnot. But in the US, it is really gaining a lot of traction in terms of real estate players or companies that's just marketing purely on an online basis, or the bulk of their sales is generally being done on an online basis. So basically, when you want to buy and sell houses, you don't really have to go and get a broker. You do everything online yourself, and basically the whole flow is pretty smooth, and it actually cuts off a lot of middleman costs. So that's the key value proposition that a lot of these digital real estate players are providing. So you don't really have to go down actually to see the house. Everything can be viewed online, 360 degrees kind of viewing. So you get to experience that kind, of purchase process while ensuring that you also get a similar level of satisfaction, and you're not overpaying for this kind of services as well. So what they're trying to do in the US is basically to reduce the overall commission cost, which generally is roughly about 5 to 6% on the norm. So it's very high in the US, all the way down to less than 2%, so roughly about 1.5%. So that is their value proposition in terms of cutting off the middleman. So one of these stocks that have been on my radar of late, and its share price have actually dropped pretty significantly, is this counter called Redfin. So some of you might potentially be more familiar with its bigger peer, which is Zillow Group, ZG, ticker ZG. So this one has a ticker of RDFN, but these are all digital real estate players. And the value proposition, again, like I mentioned to you, in terms of paying their employees or the property agents, it's on a fixed salary basis instead of on a commission base. And the commission bonus portion comes in the form of consumer satisfaction. So today, if the seller is very satisfied, if the buyer is very satisfied with the whole process, that's where they will give a good review, and that's where their bonus will actually comes in that form. So they can then partake in having that kind of variable commissions if the consumers are satisfied. But most of the time, their salary is fixed. So there's not going to be much hard selling, so to speak, to close the deal. At the end of the day, they are pretty much drawing a fixed salary, and their goal is basically to provide as much satisfaction to both the sellers as well as the buyers as much as possible. So I think this is a new kind of standard which they are introducing over the past few years. So it's still in the very early stage. And you can see over here that revenue has been growing pretty steadily over the since 2017. And at this current juncture, the company is still loss-making, but the losses have pretty much reduced pretty substantially over the past few years. And I believe that the market is looking at 2021 being the first year of the company generating profits. All right, so that's one thing to look out for. And the company has already been cash flow positive in 2020. Hopefully that trend can actually continue on in 2021. So for this particular counter, it's only if you believe. So it can be quite volatile, as you can see in its share price. It almost hit $100. So the last high was at 98. So you almost hit $100, and yes, retraced back to a low of roughly about $55, $50 thereabout of late, and then recently rebounded back to the $57, $58 level. So it can be pretty volatile. But this is potentially a sector that you might want to consider looking at if you believe in the digitalization of basically everything. So they are one of the key players in terms of digital real estate. So that's basically how you might be able to partake in the rise of housing demand in the US, besides being just purely on a lumber basis, right, which is a commodity that can be pretty volatile. If you wish to have less volatility in your portfolio, you can go for some of this, maybe like downstream players. Or if you really have a longer term view, you want to play on a longer term view, I think this digital real estate players who are not profit making at current might potentially be multi-bagger players moving forward if you do have a long horizon in place. That's about all that I have. Nicholas, anything else to add?
No, fantastic. I think you hit the nail on the head, and I think we've shown a lot of your viewers how to play the lumber housing game in the US. But more importantly, I hope that viewers will know that that there's more life than Tesla out there, and there's more life than Bitcoin, Tesla, and there are different ways to play quite significant games. This last stock that Royston brought up, RDFN, I think seems really interesting because we want to merge the new world from the new tech to the old world. And like what he said, I mean, I've looked at the quarterly numbers. I think there's very significant growth. So, and the stock price has also come down significantly. So these are some things definitely to look at. And places like, and then just before that, the Home Depot, the Lowe's, the stability of the stock price over multi-years, with the dividend, with the brand name out there, could be places to hide also, folks. I mean, if you've got too much high-tech stocks that are volatile and you are a bit nervous about the situation ahead, those are places where you can actually hide your US dollars and get into something quite steady. Pick up a 2.5% or 3% dividend, and then maybe we look at everything probably late in the summer or so. But thank you.
Yeah. All right. Yeah, that's about all that we have for our audience. Thank you very much for staying with us. And once again, if you've got any questions, drop us an email over at contact@newacademyoffinance.com, and do check out our YouTube channel as well. All right. Thank you, everyone. We look forward to having you guys again pretty soon. Thank you.
Thank you.
Thanks, Nick.
Thank you.
Bye.
Thank you. Bye.